Hey there, friends. Thanks for watching. My name is Isabel Rodriguez with Precise Finances, providing bookkeeping and advisory services to individuals and small business owners. I'm a certified bookkeeper, and to me, bookkeeping is more than just looking at past data. It's about using that information to empower business owners and individuals to make informed financial decisions that build stability, confidence, and a brighter future. In today's video, I'm addressing a common misconception that I've come across multiple times, unfortunately. The idea that showing losses or little profit in your business is a good thing. I'll explain why this mindset can hold you back, and I'll share real-life examples to help you make choices that support lasting success. Okay, so now I do understand that there could be a million different cases. In this particular video, I'm going to give you 3 examples of 3 different scenarios and how 2 people in each scenario applied different systems, different strategies, and each of them had different outcomes. And also, we're going to address how even though we have 3 different scenarios, the principle applied to each scenario is the same, both in a way that it doesn't benefit the business owner and in a way that it does benefit the business owner. Let's get down to business. Scenario number 1, a brand new business owner or entrepreneur, somebody that's starting this idea, or not necessarily starting this idea, but going solo on their own, or having the spouse or family members or friends joining them, but basically just starting a brand new business on their own. So there could be two different approaches to this particular scenario. We have business owner A and business owner B. Business owner A is managing their money, and business owner B is chasing the loss. So if you see here, business owner A keeps a regular financial reviews, sets profit goals, profit, not revenue, profit, and I'm going to explain a little more on this, and plans for taxes. Now, business owner B, who's chasing the loss because he heard that having a business that has losses or showing losses at the end of the year for taxes is a good thing, avoids financial reviews, ignores cash flow, and neglects tax planning. Quick pause on the setting profit goals. I've worked with new clients who are bringing monthly 10, 15, 30, 50, $100,000 a month, and there's no profit, or it's very little profit. And the reason why this happens is because in reality, they are not sitting down and planning and projecting out what the revenue is going to be like and what the expenses to create that revenue are going to be like. So they don't have this view on what the profit is going to look like. To help you more on this, I created a profitability tracking sheet that I share with my clients that you can find using the link below for the profitability tracking sheet. And basically it calculates how much your profit is going to be, say for a certain project or a certain product that you are going to build, create, sell, however your business, whatever your business is about. And the only thing you need to do is add what's the amount in revenue, or how much are you planning to charge, and list out all the expenses. It also has a section for the overhead, because a lot of times business owners, especially if they're starting, especially if they don't have time to review their finances, they ignore the overhead that sometimes is pretty high. So it also helps you calculate, and of course you can change the percentage because every business is different, and the overhead can be from 5% to 20% to even 40% sometimes I've seen. So, because depending on certain things, right? How much marketing they're putting in, so on. Anyway, you can download that tracking sheet, and it's going to help you just at a glance see how profitable selling that product or providing that service is going to be like. at the amount that you are planning on charging. And if it's not enough, then you can also come up with different ideas on how either lower the expenses or you probably need to increase your price. All right, scenario number 2. Same two different strategies or approaches. Same scenario. Someone or two people who have a 9-to-5 that pays the bills and also helps them fund a side hustle that they are either starting or they have had for like 2-3 years. And the goal is the same. The goal is to grow the side hustle so that it replaces the 9-to-5. Person A follows these exact same habits. Person B, someone told him or he heard somewhere that if he shows losses on his side hustle, it's going to help him during tax season. Now, this is no tax advice. It is mainly a guide to help you understand how the myth of showing losses in a business is actually hurting you. So, yes, it could sound super sexy. I don't show any profit. The opposite, I show, $20,000 in losses. So now it's going to help me not pay too many taxes or get a refund when I file my taxes. And it sounds super sexy and smart. I'm not going to tell you it doesn't. However, if you think about it, the money that you are earning in your 9-to-5 and also that you're hustling to earn in your business is just leaving your bank account still, either way, and it's stopping you from actually making the side hustle replace the 9-to-5. And not only that, sometimes I've seen that people quit the 9-to-5 and they don't really have a system in their side hustle. And yes, it is showing that it's bringing a lot of revenue, but because they don't have these habits, because they have a different mindset, because someone told them that it was good to show losses, they continue in the same rabbit hole. And the third scenario, same thing, business owner A and B, same habits. Of course, there's a lot more that goes into it, but this particular video is about the myth that showing a loss is a good thing when tax season comes. And so business owner A continues growing the business, has been funding their retirement, have a solid emergency funds and different things. Business owner B continues in the business, continues hustling and potentially growing their revenue, yet there's no difference from one year to another because they don't have any plan. They are just going on autopilot. Bring revenue, spends the money, bring revenue, spends the money. And so see how these two different approaches can create, even though there are same scenarios, the two different approaches, the two different strategies can create different outcomes. All right, my friends, so to wrap it up, I'm going to give you a few recommendations. Number 1, focus on profit, not just tax savings. Shift the focus from reducing taxes at all costs. And by this, I mean either spending all the money that you get in different business expenses so that you have a lot of write-offs, or not going out there and trying to grow your revenue because you're going to, because of that, grow your profit. And because you grew your profit, now you're going to pay taxes. And what you're trying to do is not pay taxes. Shift the focus from there to building a profitable business. Profit creates opportunities for growth, investment, and stability. And if you plan ahead, if you work with a professional who can guide you on how you can start building a fund for retirement or for different things. Again, this is not a tax advice or financial advisor advice, none of that. It's just ideas that you can start thinking of in order for you to intentionally build a profitable business. Next, build financial awareness. Develop a habit of regularly reviewing your finances, understanding cash flow, and planning for taxes. Clarity helps you make informed decisions and avoid impulsive spending. And to help you with that, you can download my Simplified Money Planner, the spreadsheet, using the link below in the description. And then number 3, seek the right guidance. Work with professionals, bookkeepers, CPAs, financial advisors who understand your goals and can help you create a tax strategy that supports profitability instead of encouraging losses. At the end of the day, running a business is about building something sustainable and profitable, not just chasing tax write-offs. By shifting our mindset, focusing on smart financial habits, and getting the right guidance, you can set your business up for long-term success. And if you're ready to take control of your finances and start creating clarity, check out the free resources I've linked in the description of this video below. They're designed to help you organize your income, expenses, plan for the future, and stay on track with your financial goals. Small steps lead to big progress. So take the first step today. And if you need more guidance, you can also visit our website, precisefinances.online, or if you need help organizing your personal finances or being more in control of your money, you can visit becomingcashmaster.com. That's all for today. Thank you so much for watching, and till next time.